It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast this morning as we break down for you the Australian property market. Don't forget, if you'd like to get in touch with us, our email address is myrealestatepodcast@gmail.com. We've always got new listeners, which is why we always remind you about that email address. It is a Tuesday, February the 24th. Andrew Mountbatten Windsor, are you following this drama that is playing out at the moment with police inquiries now widening? Yeah, former protection officers are being questioned about what they may have witnessed during his tenure as this trade envoy, while authorities continue this detailed search of Royal Lodge in Windsor. Attention is also turning internationally as any significant evidence emerging could have political ramifications for Donald Trump. In the US Epstein files, they have been delayed in the US, but maybe more will come to light through the UK inquiry, at which point Trump and his Republican Party won't have any control over. I mean, you just can't make this stuff up. Andrew has got to be sweating. Let's go to Sydney right now and catch up with Margaret Lomas from Destiny Financial Solutions. And good morning to you, Margaret. Welcome on to the Real Estate Breakfast for the very first time. Are you following this low-life specimen called Andrew, who we are finding out more about and might be going to jail if the police can prove their case?
Well, let me say that Andrew was born in the same year that I was born, but he isn't representative of my age group with his actions. And I remember even way back when I was quite young, in my 20s, there was a young woman by the name of Koo Stark who was a stripper, and she set all the cat amongst the pigeons because he was actually dating her. And at that time, I can remember thinking, this guy's a bit sleazy, but I had no idea that that was only the tip of the iceberg. I mean, the things that he's been involved in, allegedly, it's crazy.
Yeah, we like to throw that word in, allegedly, but yeah, Thailand not off his radar. I suppose it's giving Thailand a bit of a bad rap here because one can only draw the bow so finely in terms of what he might be doing in Thailand.
Yeah, and I can remember back in the Koo Stark days, it was really a big thing. And that's where he first got his nickname Randy Andy because of his relationship with Koo. And we all thought that was absolutely shocking. But really, in hindsight now, that's nothing compared to the sorts of things that he has allegedly been involved with since. And when evidence begins to mount up on top of each other, layer by layer by layer, you have to ask yourself the question, where there's smoke, there's generally fire. And so allegedly, because we have to say that, nothing's been proven yet, but behind the scenes, we can all have our own opinions, and the opinions would have to be that he's probably partaken of some pretty dubious actions and really surrounded himself with the kind of people that self-respecting citizens just normally wouldn't. So how far does that go? Is he letting out state secrets? I'd say probably. From the sounds of it, Jeffrey Epstein was very good in how he fostered his relationships with people and the people they knew and the people they knew in a constant effort to widen his own circle, kept copious notes on all of it. And of course, now the chickens are coming home to roost.
Yes, the thing with Randy Andy is he just didn't realise he was being played as he has been by Epstein. A bit of a talking point this morning. Let's get it back to real estate because interest rate hikes are starting to test confidence across Sydney with signs of a, shall we say, more cautious tone emerging in the auction market. While many properties are still selling above reserve, behaviour, Margaret, seems to be shifting here because PropTrack tells us around 24% of listings are now transacting prior to auctions as vendors accept strong early offers.
I think there's a general fear that what is going to happen from here is that we will see those additional interest rate hikes that have been flagged by many economists toward the end of last year. And at the beginning of this year, we already saw one of them transpire. And so I think what we're going to see now is people or vendors have this fear that if they don't take those early offers, they're going to go to auction, be passed in. Next minute, there's another interest rate hike every 6 weeks. We are looking at a meeting of the Reserve Bank, and that they're then going to miss the boat on getting that good price that they're after for their property. At the moment, we're still seeing a bit of activity in the market. To me, it's the early signs that we are going to definitely see a market slowdown. And let's be honest, it's about time. I've never in all of my life in property, and we know I'm pretty old now, so I've been through a lot of cycles, seen a market fueled so strongly and for such a sustained period of time and over most markets in the country all at the same time. It's well past time that we started to see a moderation to the market. And I think these interest rate rises, or at least the fear of them, just might be the thing that does that.
Yeah, and there's also this other new dynamic that is emerging in Sydney's housing market right now, and that is a concentration of high-income earners under 35 competing aggressively in the premium lifestyle suburbs. I mean, this is one of the other things that is evolving that you probably haven't seen to this extent. Many are working in tech, finance, and other high-growth sectors. They're earning well above $150,000 a year. With the removal of the salary caps on first-home buyers' support and expanded price thresholds, of course, the higher income buyers, they're now accessing low deposit schemes, which is fueling it.
Absolutely. And this was always going to be the problem. The government has interfered to the point where they have an almost unmoderated scheme to help people get into the market. And it's the very people who don't really need that help who are accessing it now. And the people who do need the help are now being priced out of the market. To your first point, we do see young people in their early 30s paid well above $150,000 a year. I have a relative in my own family, I'm not going to say who it is, who's in the tech industry. He's quite young, early 30s. He is paid what would be an eye-watering sum to work on a contract basis. I think to myself, back in my day, it would be unheard of for someone in their 30s to be on that kind of high income, relatively speaking to the rest of the working population. There are a significant number of those younger people who are earning these higher incomes now. But secondly, what's now happening, because of this expander first home buyer scheme, it's really just flipped the whole thing on its head and created a different but same problem, in that those people who really need the boost up and really need the help to get into the market can't do so because the prices of the property that they want to buy in that lower end are being pushed up by these buyers who have got plenty of money and can get approved for higher loans. I have another relative in the family who is not so much a lower income, but an average income earner. And she's just applied for the Help to Buy scheme, which is another, home buyer help scheme. And they've approved her for that. But the amount of money that she's allowed to spend can't buy her anything. And she isn't even looking in Sydney. So we're now getting this kind of two-speed thing happening where first home buyers who are in those lower markets are still being priced out of the market, even with government help. Those people who don't need the government help are taking it because the criteria has been loosened and it's easier for them to get into those schemes. They're just pushing the market up again. It was always a scheme that was designed to have fallout everywhere, and now we're seeing it happen.
And we are talking to Margaret Lomas there in Sydney. When we come back, we're going to talk about Melbourne, and in prestige pockets, quality family homes on large parcels are trading well above peak values. We'll talk about that after this.
We are more than just a real estate podcast.
Coded message, I think, is that we should, unfortunately, probably expect another rise in May.
We cover a multitude of subjects, including property data, current buyer-seller sentiment, and the mood of the market.
Most of the time, you can get a container home fully installed for $120,000 plus the block of land.
Follow each week all of the main talking points and know your property.
It is a Real Estate Tuesday as we continue talking Aussie property. Margaret Lomas is with me. And time to talk about Melbourne, which is seeing this clear shift away from auctions, with more sellers opting for private sales as interest rate uncertainty weighs on confidence. And this is interesting in prestige pockets. Quality family homes on large land parcels are trading 10 to 15% below peak values.
Look, Melbourne is in a world of pain in their property markets, really, for quite a number of reasons. Firstly, any investors who buy into Melbourne now are taxed on their investment in a way that no other state is taxed. We're all taxed on investment, but Melbourne has additional taxes on people who own investment properties. So straight away, that makes Melbourne less of a desirable area to invest in. And now we have the problem that we've got interest rates starting to go up a little bit. We've got already more listings in the market than other states have. Melbourne never really got that big push on prices that most of the other capital cities got. Certainly Perth and Adelaide and Brisbane, big push on their prices. Incredible gains were made over the last 2 years in those two capital cities. Melbourne did not follow suit. I think they were kind of hoping that they would come in behind and then have their boom. It doesn't look like happening now. I've always found it interesting how Melbourne has always been this big auction market. Everybody wants to sell at auction, and it's a nightmare when you're trying to look at property because you can't really get a good feeling around what the market is asking in any area because everything's listed at auction with no price range. I know for me, it makes it a market that I don't want to go into because I'm uncomfortable with that. I don't like auctions. I won't buy at auction. And therefore I think, well, I'm not going to go to Melbourne because I have to buy at auction there. It's really weird how it's the auction capital of the world. And I'm not sure why it became that.
Yeah, it's definitely the auction capital of the world. You say that you don't buy in auctions. Have you never bought in auctions?
No, I won't buy at auction because I'm buying a property as an investment. I mean, I don't even buy one I want to live in at auction, but I'm buying a property as an investment. And when I do that, the primary driver for me is the numbers and how they stack up. So when we were first buying properties for investment, the properties that we bought needed to really take care of themselves. We needed to be sure that they were going to get enough rent to cover the interest on the mortgages and make it so that there was no big impost on us. We didn't have to contribute much or anything at all out of our own pocket to support that property through to a time where it would grow in value. And one of the reasons we were able to get a number of properties in those early days is not because we had a lot of money to buy a lot of properties, but because the banks gave us the mortgages on them and then the properties looked after themselves and didn't draw any money out of our own pockets at a time that we were raising children and had a lot of expenses in relation to that. If we were to buy at auction, we risked bidding too highly just to win that property that we'd had our heart set on and therefore blow out the numbers and come away with a property where we've paid more than we'd bargained for and therefore then it didn't work so well and we then ended up with a bit of a financial crisis on our hands. Mm-hmm. That's the main reason we've never ever bought at auction.
All right, good stuff, Margaret. We will leave it there on our Tuesday. Thanks very much for coming back on to the Real Estate Breakfast this morning and have a great day.
You too.
We connect you to the best real estate information across Australia. The Real Estate Podcast.